Hey there, and welcome to today's edition of Is It Taxable? My name is Nate Matherson, and I am your host. And on today's episode, we have Sam Ross, co-founder of Numeral. Sam, thank you so much for hopping on today.
Thanks for having me.
So I've got a whole bunch of questions about e-commerce sales tax, and it's a pretty complex topic. I think there's a lot we could cover, and I appreciate you hopping on. The first question I have is, at what point in their business do e-commerce brands need to start worrying about sales tax?
Good question. I think generally my advice here is when you're starting off, it's good to make sure you're handling sales tax for the state that you're based in. So I've had e-commerce businesses based in California, and so from day one, you want to make sure you're registered for sales tax with the governing authority in California for that, and you're collecting on any orders to clients or to customers in the state of California. And then on other states, assuming you don't have employees in other states or holding inventory in other states, generally, you're good to go with just your home state.
So you mentioned having employees or inventory in other states. I want to unpack that a little bit. I've heard about Nexus. Does just having an employee in another state or having inventory in another state have something to do with Nexus?
Yes, there's this concept called physical nexus or physical presence as well. And effectively what that means is if you have a presence in any given state, so I might have my e-commerce business based in California, but I have an employee based in the state of Washington. As soon as I hire that employee in Washington, now for any orders that I ship into the state, I'm actually required to collect and remit sales tax on those orders. And so that concept is physical nexus. So the most common way you get it or you have it is from having an employee. You could also have it from holding inventory in a state. Those are generally the two most common ways. There's some more esoteric ways that you get nexus, but those are the primary ones that most small businesses should really be paying attention to.
So that's physical nexus, and then there's this other concept of economic nexus, which I think is a relatively new concept. How does economic nexus work?
Yeah, great question. So this concept of physical nexus has existed for decades, and it's been very legislated. What happened was, e-commerce was getting big in the 2010s, and you had businesses that were shipping across the country but weren't paying sales tax in many of those states. So customers were able to buy stuff tax-free, which was convenient if you're an e-commerce business, but maybe felt unfair for local retailers who couldn't compete with that. And so there ended up being a big Supreme Court case in 2018 where the state of South Dakota won over the retailer Wayfair, and that established this new concept called economic nexus. And effectively what economic nexus means is in any given state, if you sell over a certain amount, the state can require you to register and file sales tax there. So for example, if you sell 200 orders or $100,000 of goods into the state of Illinois in a given 12-month period, you're actually required to register there and collect and remit taxes on any order shipping into that state.
So just to play back to you, so it sounds like we can have either physical nexus or we can have economic nexus if we're doing a certain amount of revenue or a certain number of transactions in a given state. And it also sounds like those thresholds, at least in terms of economic nexus, vary depending on the state. Is that right?
Yeah, the crazy thing with sales tax is it's not legislated at all really at the federal level, apart from the Supreme Court ruling, which is not even legislation, right? And so you kind of have this system where 46 states plus Washington DC and Puerto Rico each have their own rules, and it's totally decentralized. So yeah, generally it can be hard to give answers how the system works, because one state might implement it one way, another state might decide to do something different.
And say I'm like a fast growing e-commerce store, maybe I'm going to 5x this year from 1 million to 5 million in terms of revenue. How often should I be checking in on Nexus? Is that like a monthly activity? Is it an annual activity? I know you've worked with a lot of e-commerce brands. How often do they check in on Nexus?
Yeah, I think, our recommendation is that, you should really have set up monitoring so that you can kind of get alerted as soon as you cross Nexus anywhere. Because the challenge is let's say you cross that nexus in Illinois if you don't, go and start register very soon, you might be accruing liabilities into that state. And so for all the orders then at that period that are shipping into Illinois, if you're not collecting those taxes, eventually you might have to, you should pay out of pocket and make up those taxes. So you go from a situation where the customer pays the tax and you're just, transporting it to the state, into a situation where the customer is not paying tax and you're paying out of pocket. And so for an e-commerce business where maybe your gross margin is something like 10%, if the tax rate is like 7-8%, it means most of your margin is basically all going to these back taxes. So generally, my recommendation is to find you a provider who can track this in real time for you and then alert you as soon as you approach or cross these nexus thresholds.
And I'm guessing that's something that Numeral does. Is that right?
Yeah. So if you want to work with Numeral, one thing we can do for free is, you can go in, connect your data sources, be it Shopify, Stripe, any other provider that we support, and no credit card needed. And yes, for free, we can go and monitor Nexus. You don't have to work with us. You don't have to jump on a sales call.
Okay, so it sounds like this is really a liability for the business and not the consumer. And if I'm a fast-growing e-commerce store and I have Nexus, but I'm not collecting sales tax, then I'm creating a future liability for my business. And you mentioned before having to go and register, and I think you mentioned Illinois as an example. Say I have Nexus in like 35 states. Does that mean I actually need to go and like register individually at each state? How does that work?
Yeah, broadly speaking, yes. You have to go to each of the states. Each have a different website portal. Each ask you different questions. A majority of them will then go once you fill out a bunch of paperwork and hopefully you answer that correctly. They'll go and mail you some like a physical PIN code in the mail. Think like two-factor authentication, but with old school paper mail. You have to make sure you receive that letter. If you don't receive that letter, good luck. And then, hopefully, if all things go well, hopefully you can get that done within a month. But yeah, that's it can be a lot of work.
Sounds like a lot of work. And I kind of going off on a tangent a little bit. I'm getting a little distracted here, but I saw the other day that like product classification is also really important. I think I saw a social media post where someone was saying that like in certain states, like a Twix might not be taxable, or I think actually a Twix is not taxable because it contains flour. But then I think I saw that a Snickers is taxable in certain states because it doesn't contain flour. And that feels like a product classification question. So I guess my question to you is like, how important is product classification for an e-commerce store?
Yeah, generally it's pretty important. The areas it's most important for is for anyone in food and beverage. That's probably the most important. The next most important might be like I would think like apparel can have some distinctions there as well. So, you look at the state of Pennsylvania and most apparel is tax exempt, but if it's considered formal wear, and I won't get a lawyer, but like what defines formal wear, but if it's formal wear, it'll be taxable in the state. And there's all sorts of other crazy rules I won't bore you with. But yeah, obviously that's one of the reasons it can be tricky with e-commerce sales tax is if you're selling different products, not everything's taxed. Not everything's taxed, and some things can be taxed at different rates as well. So obviously that's one of the core competencies that we try to, or that we help our clients with at Numeral.
And what about like Amazon or Walmart? What if I'm an e-commerce store that's selling on, let's say, Shopify, but I'm also selling on Amazon? How does that work?
Yeah, that's a great question. So, in the aftermath of that like 2018 Supreme Court ruling, Wayfair South Dakota I was referring to, one of the things that came out of it is this concept known as what's called a marketplace facilitator. And so what that means is, any of these marketplaces, be it eBay, Amazon, TikTok shops, etc., those marketplaces are required to collect and remit taxes on behalf of all the merchants there. And so that's nice because you don't have to worry about it on those platforms, unlike your Shopify, which it's not a marketplace. Well, the Shop app is a marketplace, so it gets very complicated. But if you're selling on your direct-to-consumer site, you're not considered a marketplace, and so you're responsible for it there. And so while those platforms do collect and remit on your behalf, they do still affect where you owe sales tax. So to give an example, in about half the states, when they go and look at what are the thresholds for you to cross Nexus. So use California as an example. If you sell $500,000 in a 12-month period into the state of California, you need to register there. And California does look at marketplace sales for that calculation. And so if you were to sell, say, $495,000 on Amazon and maybe $10,000 on your Shopify, even though it's only a small amount on your Shopify, technically you'll have crossed that threshold. 495 plus 10 is 505, and so you need to be registered. And so it's important to be tracking those marketplace sales. And then finally, in some states, when we actually go and prepare the filing, they ask you to break out marketplace sales or non-taxable sales. They call it different things. Some even go as far as asking us to give the EIN number of those entities like Amazon or Walmart.
Okay, so like say I start my e-commerce journey on Amazon and I cross a Nexus threshold in a particular state, and then I decide to set up my own Shopify store to sell more directly to consumers. It sounds like the sales on a marketplace facilitator like Amazon can count towards my economic Nexus threshold in a large number of states, but not all states. And so it's worth tracking Nexus and sales across marketplace facilitators as well as your own store. Do I have that right?
Yeah, exactly. It's important to get the full picture. I think some people come to us and they've connected they've gone in Shopify. Shopify tells them which states they have Nexus in. Shopify is not pulling in their Amazon data. And then we do a full analysis for them and we find out the picture actually looks quite different than what they're seeing within Shopify.
I mean, all of this just sounds really complicated. I'll admit. And so I guess my next question is like, what happens if I get it wrong? Like, what can happen? Like, what are the consequences of like not being compliant in terms of sales tax?
Fun topic. What are the consequences? I think, it can be pretty gnarly based on the state and how aggressive they are. So, what are like the worst case scenarios, we've seen is, potentially, you haven't been collecting for years and you didn't realize it, and you go to get, and the state comes and audits you and says, hey, have you been filing? It seems like we should be filing in our state. Are you filing? They open up the books. They find out you owe, I've seen it in millions of dollars, but, it could be hundreds of thousands. And you have no option but just to go pay that money, and you'll also pay additional penalties and interest on top of that. And then the other challenge too is you're not shielded by your entity here. And so let's say the states are coming after you and you try to just make your entity go bankrupt. The states can actually pursue you personally as liable for sales tax. And so, it's pretty scary, especially because there's 47 different states that could be doing this to you.
Okay. So if we don't pay the tax or haven't remitted it, there are penalties, interest, plus we could be on the hook personally for that balance, regardless of what happens with our business entity. And so it sounds like the simplest option is just to just do it correctly and collect the tax from the customer and remit it to the state. That way we don't have to worry about all of those like very scary sounding things. Is that generally the right approach?
Yes, I would say, I generally recommend, if you want to sleep easy at night, I think Nassim Taleb has a quote around this, but pay your taxes. And so that's my advice is find a provider that can just get it off your plate. That's why we started a business like Numerals. I was an e-commerce seller for years, and I started digging into all this. There was a lot of brain damage just trying to learn it all. And so whether it's us or another kind of really hands-on provider, I'd recommend getting it off your plate, take care of it. The other scenario too, I didn't mention other scare stories. We've seen folks who have collected tax for years and not remitted that, and that's also a big no-no because technically that's theft. It can even be a felony in some states. So make sure if you're not accidentally collecting and not remitting.
That sounds even more scary to a degree. Yeah, we definitely want to avoid felonies on this podcast when we can.
Yes.
But I have a few rapid fire questions.
Let's go.
Is that okay? All right. So my first question, it's probably a dumb one. What about like shipping? Like, do we need to charge sales tax on shipping, or is that generally excluded?
Good question. It is state by state. So I believe in the state of California, shipping is tax exempt. Many states, you actually have to pay taxes on shipping.
State by state. It sounds like all of this is state by state. But
yes.
I've heard of this thing called SST. What is SST?
Yes, SST is the Streamlined Sales Tax Association. It's a non-governmental group that coordinates across, I believe, around the states. And what it does is it makes it more streamlined on the back end to file your taxes. So it's one of the tools we leverage on our back end in order to kind of file taxes at scale.
What about like VDAs? What does that stand for, and when are they generally helpful?
Yeah, a VDA is what's known as a voluntary disclosure agreement. And so effectively those are used in cases where you maybe should have been registered usually years ago in a state, you failed to do so, and now you do the analysis and oh man, you owe hundreds of thousands of dollars to a state. It's gonna be lots of penalties, lots of interest, and you're looking for a way forward. And so what you'll do is you work with a provider. It could be a numeral, could be a service provider. And in those cases, we would typically go to the state, say, hey, California, I have a client that, should have been paying taxes. They made a mistake here. They want to owe up to it. And then we'll negotiate with the state to get the penalties and interest hopefully waived. Again, it's very state by state. These things all work a little different in each state. And then in the end, you pay the states all the tax dollars you owe, but hopefully you get them to waive some of those penalties. Now, you can only do a VDA if the state has yet to audit you or contact you generally, and if you have not been collecting sales tax previously.
Okay.
And so it's pretty specific, often, and it can take months. I think it's a good tool when you have a large amount of taxes due in a jurisdiction, and you want to save on those penalties and interest. In many cases, if you're just a little bit, a few months, say, behind on some of your taxes, would recommend what we call like back filing. And so in that case, instead, let's say you crossed Nexus, making this up, in December 2024, December 1st, 2024, we would just go when we register you with the state, tell the state your first date of liability was December 1st, and then we'll go file returns for you in December, January, February, et cetera, get you caught up. And you'll have to pay some penalties and interest, but generally that's a much quicker experience.
Okay.
But yeah, it's really case by case, and you'll have to do it. It's good to talk to a consultant to get the full analysis there.
Yeah, so it sounds like back filings can be the right choice if there's a low liability. Maybe it's only been a month or two, whereas a VDA might be more helpful if it's a much larger amount of taxes due over a much longer period of time. I've got two more questions, and then I'll let you go. You told me that story earlier about it sounded like somebody you knew that collected tax but didn't remit it. Do you have any other crazy stories or big mistakes that you've seen a brand, and you don't need to name them specifically, make with sales tax?
Let's see. I mean, one is, I think if you're a marketplace, it gets really, really scary quickly because you have a large amount of revenue flowing through your system, GMV, and your margins tend to be on the lower side, right? So we talked to a marketplace at one point who they had neglected to deal with sales tax. We did the analysis. They had over $25 million in back taxes, but less than $1 million in the bank. And so, that could be like a company ending situation. And so, yeah, I think marketplaces, it's extra important to really get this right, whether you're e-commerce marketplace or software marketplace as well.
Okay. And my last question is, you've mentioned Numeral a couple times. Can you give us the elevator pitch? What does Numeral do, and how does it help growing e-commerce brands?
Yeah, great. So Numeral is an end-to-end solution for all of your sales tax needs. So what does that mean? We work with e-commerce and software businesses primarily, and we'll own the full experience for you. So it's, we offer, modern, easy to use software, but also, high touch service. And so as much as possible, sales tax is something you can manage in just a few minutes a month once you get onboarded with us. And we handle everything from determining where you owe taxes, getting you registered, doing those ongoing filings for you, taking care of any special cases of, again, these historical back filings, amendments, etc. And we'll do other higher touch things. For example, the states love to send physical mail. So you're registered in 40 states. That means you're probably getting, a few dozen pieces of mail a month. We'll scan all of that mail on your behalf. Our team will go and sort it and read it. If action needs to be taken, we'll take action on your behalf. We can get power of attorney, call states. So really the idea is we're doing all this kind of nasty behind the scenes work so that your taxes just get paid and you don't have to think about it.
That sounds great. And I saw that you have some pretty big logos on the website with Ridge and Graza. I love Graza's olive oil. Every time I'm at Whole Foods, I pick one up. But Sam, thanks so much for hopping on. And we will put a link to Numeral in the episode show notes, as well as a link to your LinkedIn. Thanks so much.
Thanks, Nate.